Let's get more on that tech symposium, how it could impact markets as well. We've got our our China correspondent, Min Lo, as well as Bloomberg Intelligence equity and strategy analyst Marvin Chen, also with us this morning in the studio. But Min, we'll start with you, because really there's a lot of expectation around this meeting and the signal that the CCP could be sending as well about support for the private sector. But what do we know so far?
Well, it's hard to speculate what they will talk about, but we know when President Xi first hosted such a symposium to boost private sector sentiment, he had pledged some moves such as tax cuts, financial backings for some of these companies. So perhaps we could see a slew of measures being announced at the end of this meeting. We'll have to wait for lines for that. So potentially it could be a catalyst that could continue to fuel this rally. But also I think it's got a lot of symbolic significance as well, because you have all the tech titans, the founder of Alibaba, Tencent, DeepSeek, Huawei, Xiaomi, they are all attending. And the fact that Jack Ma is attending, I think, is particularly significant because he's arguably one of the most prominent faces that has suffered under that multi-year crackdown. His financial company Ant was supposed to IPO in the US in 2020, arguably one of the biggest IPO at the time, that was abruptly pulled off after Jack Ma publicly criticized the Chinese regulators. And he's since sort of gone into hiding or just avoided the public spotlight for a while. But now that he's sort of coming back out and getting an audience with President Xi, that suggests that maybe this is a culmination of that multi-year crackdown and an acknowledgement from the government that they recognize a lot of that disruption and innovation is coming from the private sector, and maybe they need to shift their stance towards private company and maybe pull back a little bit from that common prosperity campaign that's seen as a way to rein in the billionaires and the excesses of the private sector.
Min, talk us through some of the potential risks, though, because I'm thinking back to November 2018 when we had the last sort of meeting. There was optimism again from investors then that this would be about kind of doubling down on the private sector, and instead actually it presaged this years-long crackdown. So there is this delicate balance for Xi. On the one hand, he perhaps wants to stress, the important role of private sector firms, but he may also state that they he may also say they prosper at the will of the state, right?
Yeah, he could. So again, it's really hard to speculate what would happen, and I think we have to wait and see. And yes, investors have been burnt multiple times from failed rallies of the past. So it's interesting. What I think is particularly interesting is the timing of this. It's just coming weeks ahead of the NPC. So could this be a sort of informal sharing session, exchange from both sides to get a sense of what the private sector needs from the government, and vice versa? And could that factor into considerations in terms of what sort of policies we could get out of the NPC, because the government had pledged that they want to protect the rights of the private sector better. So I think a lot really is in the details that comes out in the coming weeks.
So Marvin, on that point, yeah, the devil in the details maybe a little bit, but markets have already traded off this because we saw that spike in Alibaba on Friday with the initial report coming out. How do you think investors are going to be interpreting what we get out of this, headlines or just the event even taking place?
Yeah, I mean, we saw some of this kind of selling on the news action towards the end of last week. But obviously these developments are good for sentiment. But the issue with these China rallies is just how strong and fast they've come, right? Many of these companies have gone vertical over the past 2 weeks. And it has been a sentiment-driven rally. Our sentiment, China sentiment indicator is quickly moving from enthusiastic to exuberance levels. And at these levels, historically have been typically associated with mediocre returns. So, there may be some signs of overheating. And, we saw that happen with the October rally last year as well.
And Marvin, what about your outlook for the tech sector? We are now entering full swing earnings seasons. We have Baidu, we have Alibaba coming. How should investors temper their expectations?
Yeah, I mean, there's still large questions around the AI demand and monetization. And, these are broad questions for the AI theme. So we don't think expectors are necessarily expecting any, fundamental impact from recent developments. We haven't seen any significant upward revisions in earnings expectations. But we do think markets will want to focus on the guidance on how these corporates will utilize AI and going forward.
And that actually, I'm just taking a look at that Goldman Sachs call, but that sort of AI adoption seems to be underpinning as well their views on why they've upgraded their outlook as well.
Yeah, I mean, I think more broadly, it's a reflection of China making progress on their new productive forces, as it has been highlighted as a key growth driver going forward. So this is a medium to long-term call, I would say, even though we may see some short-term volatility.
Okay, Marvin, thank you. Bloomberg's China correspondent Min Lo and Bloomberg Intelligence equity and strategy analyst Marvin Chen.